about what I see happening in the markets this week, and hopefully you are now seeing the right screen. I've got screens all over the place. I'm going to start with Aussie yen, and we spoke about, or a couple of people have spoken about the Aussie, and a couple of people have spoken about the yen. From my charts perspective, and this doesn't take into any consideration what Ash was talking about or what Lloyd was talking about in the indexing. But what it does show me is completely the opposite of what both of those indicators that both Lloyd and not necessarily Lloyd's technical analysis, but the COT data and the seasonal data is actually saying. And that kind of gives me a bit of a joy, because it means that, to my mind, I'm on the opposite side of the track, and I like being on the opposite side of the track. So what I see technically is pretty compelling to me, actually, because I see the biggest picture here as a potential, well, it's a massive double bottom. I'm on a monthly chart here, right? And in 20 years, 30 years' time, potentially we'll look back at this and say, gee, that was a good double bottom. Maybe we won't. Maybe it's not going to be a big double bottom. But then I see this inverted head and shoulders sitting here, and I see it coming off a strong support level. You know, we're going back to 2008 global financial crisis in here, right? And since that time, we've been in that range on Aussie yen. We broke back into that range. I don't know that we went to the top of that. So if I'm, technically me, I'm saying that's the top of the range. This post global financial crisis range. Yes, we've been below it many times, and you could certainly extend the bottom of that range down to there, and that's fine. It doesn't change the case that I'm using, which is we are back on the road to the high side of that range. So for Aussie yen, technically, I see a big break of that resistance trade line. I won't call it a trend line because it's not. I see the inverted head and shoulders. I see the neckline of that broken and retested here. And there's the channel from which we emerged out of that inverted head and shoulders. And now we're retesting the confluence, which to my mind is a really, really nice place to find something to trade. Now, we're talking about the monthly chart here, right? And the next thing that excites me a little bit is this bar here. So 4 weeks ago, we got a key reversal bar at that exact level that I'm talking about. And since then, we've had inside bar, inside bar, inside bar. You can see there that I've actually traded this long. On the smaller time frames, we made a little bit of money out of that, but the trail didn't work so well. The trail got stopped out. Let's put it that way. And so we didn't make too much money out of that. Yet, I see this as the dominant player at the moment. This doji bar sitting here, and as I say, since then we've been inside, inside, inside. So I'm expecting this to explode at some stage. Now the question, of course, is where's it going to explode to? Is it going to explode that way, or is it going to explode that way? The fundamentals and the commitment of traders would suggest that we're going down and back into that range. And I'm okay with that if that happens. But at this very point in time, I think we're still above that level, and I'm not committed to a short at this point. This area here, I'm now back on a daily chart, will, to my mind, give me exactly what I need to know. So if we can hit that level and not close below it, I think there's a buy on. However, if we come back below that level and retest it, then I think we've got a sell on. I know that's a long, long way around where I'm at with this pair, but that's exactly where I am at with this pair. We're coming off a, potential reversal here. That's a 3-candle pattern. I think it's called a morning star for those of you who want to follow candle patterns. We've since put in a higher high, a higher low. We haven't matched that, or we haven't beaten that higher high, and we've gone into range here. But again, I think this level is crucial, and I'll be watching that like a hawk in the next week. It's around about 80-60, the 80-50, 80-60 area. It could take off. We could fill that range, so we could bounce back off, or we could get, as I say, below there and go south. Not committed to anything yet, but I think this is a great place to look for a trade, frankly. Second one I want to look at is euro pound. Now, euro pound, I have been trading short for some time, and I withstood the temptation to actually take everything off the table at this point. Or those who follow my trades would have been aware that I did say, if you want to get out here, get out here. But I felt that the bigger picture was that the bottom of this technical range, this box range here, was my target area. And there was a beautiful confluence of the bottom of that channel that I just looked at, and of course the bottom of the range as well. Look, I'm still of the opinion that that could happen, but my trailing stop has now been hit, and it does look from a shorter term point of view that we may head to the top of this range before we go back to the bottom. So I'd have to be a buyer of euro pound at the moment. The daily chart is suggesting that last week's weekly pivot has been eclipsed. I'm not sure how I can find a way in here, frankly, until we get a higher low. And that could very well happen. You can see the level that we're potentially bouncing off here, recent support area. Weekly pivot last week, as I said, a lovely little bounce off that area would be perfect. If we can put in a higher low here, I think I'm a fan of trading euro pound long, maybe back to that vicinity. I would have thought around about the 85.50 area. I think that would do me for euro pound. Then I'll be looking for shorts again. And the last is going to be euro dollar. Now, euro dollar we've spent a bit of time on during this session. And of course, it's my favorite pair to trade because it's the most traded thing on the currency board. So what do I see here? Well, completely mixed once again, but I think that there's a great area that we're at right now where we're going to find opportunities. Now, I've been harping for weeks on this potential false break, a clear false break of that resistance trend line. And it's still setting up. In fact, price has got very close to that level. You can see the break of that resistance trend line. You can see the re-entry back below it and the retest of it. As I said, we've been speaking about that for weeks. Yet I've been very, very reticent to actually take that position. And the reason is I think we're now going into, and we are in, frankly, in my humble opinion, a range that may last for some time. And that exists between the 117.50 area and the 121.50 area. So I think we're going to hang around here for a bit before ultimately this will fall away, in my opinion, once again. Now, this week, I see an opportunity to trade this long, and this coincides with Lloyd's analysis on the indexes. What I see is this strong support level that we've been hanging around for a little bit, and that's the weekly chart I'm looking at. We've got a key reversal bar on that weekly chart at that very level, and we have closed back above this trend line. So it's a key confluence area. I think it's very, very appealing to trade euro dollar long this week. Now, last week's weekly pivot has acted as resistance. There's not a huge horizontal level through there, but just like I was talking about on euro pound, I think if we can get a higher low in here somewhere, maybe off that 117.50 level, then I think this is a real good opportunity to buy euro dollar. Now, I know there's a fair bit of dollar strength about the place. It has come off its highs last week, no question. Maybe that's a retracement, maybe it's not, but I do think a higher low in here on euro dollar gives us every opportunity to trade this long. To where? Well, that's a good question, because I think ultimately I'm bearish this pair, and I've shown you that bigger picture where this level here, exactly the level that we're at, will eventually be broken. The best place to trade that from, of course, is up here somewhere. I think the next level, and certainly the level I want to be taking profit at, is in this vicinity, right about there. So just below 119. I don't think I'd allow this go through 190 at the beginning there. There's 100 pips up for grabs, in my humble opinion, but you need a higher low to trade. And that's pretty much where I am at for this week, as far as my 2 cents worth. Okay, guys, that is there for the show, and I really appreciate your company. Thank you to all the presenters who offered their opinions on the market upcoming this week. Hope you've gained something out of it, and we look forward to doing it all again next week. Thank you very much to Anita, who has stepped into the breach tonight, and I'm sure is very relieved. She may be having a quiet drink as the show concludes. Thank you, guys. Enjoy your week and keep safe, everyone who's affected in that COVID situation, and trade well. See you later. Bye-bye for now.